everyone, welcome to Oliveboard. I hope you all are fine and doing well. So I am Aishwarya here with Unit 2, that is Liberalized Remittance Scheme, one of the most important unit for our CAIIB BFM examination. So let's start and we will see some important concepts related to this unit. And I am hoping that I am audible, I am visible and my screen is visible, everything is fine from my side. So let's start with the class, and if you like this video, kindly give the like to the session and subscribe to the channel. And if you have any type of doubt, you can come and ask your doubt. And if you see the description box of this video, you can get the PDF. And also you can come and join the Telegram channel where you can get all the information related to your examination of different subjects and the updates also. So all set, let's start our class. Liberalized remittance scheme and other remittances facilities which are available for the residents. So let's discuss this. Let's talk about the liberalized remittance scheme first. Okay. If I talked about this LRS, which is introduced by the RBI, it allows the Indian residents. It allows the Indian residents to remit up to $250,000 per financial year for personal non-business purposes, and it includes some remittances too. Remittances for what? For the education, for the medical treatment, for the travel, gifts, donation, and also some investments in the foreign assets like property or the stocks. This scheme is actually available to the individuals and also for the minors, but not to the businesses. Transactions can be made through the authorized banks which are insured with the RBI guidelines, we can say. This provides a very simple process with no RBI approval needed. Remitters must follow tax and the regulatory norms, and some of the activities are prohibited here, like gambling and speculative investments are prohibited in this. Fine. If we talk about this LRS, this allows the resident individuals, which are also includes the minors. These individuals or with the minors, in a financial year, they can send up this amount to different purposes, but these purposes are scheduled under Schedule 3rd remittances. And for this scheme, individuals including minors have to complete their KYC. They have to check the funds, declare the source of their funds to the authorized dealer. Then this authorized dealer bank is responsible for reviewing the individual account activity from the previous period, that all the remittance compliance with the guidelines. According to the guidelines, nothing is there which is not according to the guidelines. Okay. These all things follows the particularly rules which are issued by the RBI. Fine. Then let's see, this ensures that inflows is there, outflows is there of the funds, and there is no money laundering things are there. If any high value transaction is there, so there will be second check also. And once the remittance is made, then this authorized dealer bank used to continue to monitor the transaction, that all the required information is submitted and regulatory reporting is there for the capital account transaction is followed. Fine. Then let's start with the FEMA. As we know that FEMA is what? FEMA is like Foreign Exchange Management Act. This is an important act which is enacted by the government of India in the 1999. Why? Obviously to regulate the foreign exchange transactions in the India. It replaced the earlier Foreign Exchange Act. It replaced FERA of 1973. And what is the primary goal of this FEMA? Is to facilitate the external trade. Is to facilitate the external trade and the payments, as well as to promote the development and the maintenance of the foreign exchange markets in India. This is more flexible act and focuses on the liberalization of the foreign exchange market. It also encourages the international trade and the investments. This is type of a important thing that facilitates the smooth functioning of the foreign exchange operations in the India, and also plays a very important key role in India's economic liberalization process. That is FEMA. Now if we talk about this permissible remittances, what is the meaning of permissible remittances? Let's see. Permissible remittances, basically under the LRS, Indian residents can remit the funds abroad, but for some permissible purposes. Like for the education they can send the money, for the medical treatment they can send the money, these are permissible. For the travel expenses they can send the money, they can use the money. For the gifts they can send money. For the donations they can send the money. For investments in the foreign assets they can send the money, remit the money. They can purchase the foreign bonds, stocks and the securities. Also they can maintain the close relatives. We can see in this session what is the meaning of close relatives. And these types of remittances also can be used for the purchase of the property and other legal purposes, as they comply with the RBI regulations. This scheme basically aims to specify the foreign remittances for the personal uses while adhering to the regulatory controls on the capital flows. Then non-permissible remittances are also there. Some are the things which are not permitted under LRS. What are these activities? Like lottery tickets. We can't send the money for purchasing of the lottery tickets. We can't spend the money on the lottery tickets. We can't remit the funds for the speculative activities. Speculative activities means it involves like foreign exchange, some purchase of foreign currency notes. So we can't remittance to the individuals or the entities that are not permitted by the Indian law. These types of restrictions ensures that whatever the funds are remitted under the LRS, that are used for the only legitimate and the legal purposes, that protects both the remitters and the integrity of the financial system. Fine. Then FATF. A question is there from the FATF. What is the meaning of this FATF? Okay. Let me tell you the meaning of FATF. FATF is a financial action. There is a mistake. Task force. And this is an intergovernmental body which is established in 1989. Why? To prevent from the money laundering terrorist financing, and other threats to the global financial system. It conducts the mutual evaluations. It conducts the mutual evaluations of the countries to assess their compliance. It works in help to maintaining the integrity of global financial system. By promoting the cooperation, transparency and effective financial crime prevention. That is the work of Financial Action Task Force. Then there is PMLA. What is PMLA? This is also an act which is a Prevention of Money Laundering Act, comes in 2022 and it is come effect in 1 July 2005. Basically, what are the aim of this PMLA is to prevent and control the money laundering activities. Money laundering activities to ensure the that this promotes the transparency in the financial systems. Money laundering under the PMLA is defined as the process of concealing the illegal money. Fine. And in this, everything is strict, that prevention of the money from any type of illegal activities. No illegal activities are allowed due to this act PMLA. Okay. So the main aim of this act is to basically prevent the money for the illegal purposes. That is PMLA. Then now let's discuss about the close relative. What is the meaning of close relative under the LRS? Okay. Just I have to remove this. Okay. So close relative means person who is closely related to an individual within the family. And close relative includes the individuals who are the part of a person's immediate family or the extended family. Basically, we can include spouse. Spouse means husband or a wife. Parents, mother or father. Siblings. Siblings means brother and sister. Children, son and daughter. Grandparents and grandchildren are also included in the definition of close relative. And in-laws. In-laws means father-in-law, mother-in-law, son-in-law, daughter-in-law, and some other relatives we can include where those basically shares a familial relationship through marriage or adoption. So the Companies Act defines close relative as one who is related to another if they are members of the Hindu undivided family, they are husband wife. One person is related to another in such a manner as prescribed under the section 2 subsection 27 of the Companies Act 2013. Okay, that is the definition of close relative. Then tax collected at source, TCS. TCS is basically collected by the seller. Seller collects from the buyer at the time of transaction. This tax is collected at the point of sale or transaction, and it is then remitted to the government. TCS is similar to the tax deducted at source, and TCS is governed under the Income Tax of India. Income Tax of India, especially section is 206C. Like Finance Act 2020 has come up with a new insertion of tax collected at source effective from 1st of October 2020, What is the tax here? 5% on the rupee amount of aggregate amount of rupees 7 lakh or more in a financial year. And there are some relaxation for the education loan. Fine. Then next one is here ODI. What is the meaning of ODI? Overseas direct investment. Investment in the equity of overseas entity. Basically, it refers to the investment that is made by the Indian companies. That is made by the Indian companies in the business activities or the entities that are located outside the India. And this investment could be in the form of equity, debt or other financial instruments. Indian companies or entities that are looking to expand or diversifying their operations overseas can utilize the mode of investments. There are some types of ODI, that is equity investment, loans and guarantees, establishing the wholly owned subsidiaries, and these ODIs are regulated by the RBI under the Foreign Exchange Management Act, and banks have to follow the rules and regulations which are set by the Government of India and the RBI. Fine. So this is basically ODI, we can say here, enables the Indian banks to directly or Indian companies to directly invest in the foreign entities or projects, facilitates the international expansion, diversification and the market growth, and it is regulated by the RBI under the FEMA and follows some guidelines for the investment limits, reporting and the compliance. Clear? Then EEFC. Let's discuss about the EEFC now. EEFC is what? Exchange earners foreign currency account. This is a special type of foreign currency account in India that allows the exporters and the service providers to hold and manage their foreign exchange earnings. This is basically introduced by the RBI and it helps businesses to retain the foreign currency earning without converting them to Indian rupees. Indian exporters and service providers can open this EEFC account. They can be maintained in the foreign currency like US dollar, euro, British pound. These can be used for the international payments, imports and the foreign investments. And it helps in reducing the exchange rate risk, facilitates the easier international transaction and it avoids some unnecessary conversion cost. So EEFC accounts provides a convenient way for Indian exporters to handle the foreign exchange earnings and make the international payment directly in the foreign currencies. That is the EEFC concept. Let's discuss now RFC. What is the meaning of RFC? See, RFC is a resident foreign currency account. This is also a special type of account. This is also a special type of account for the Indian residents. Why? Who have returned to India after leaving abroad for at least 1 year. It allows the individuals to hold and manage the foreign currency earnings without converting them to the INR. Indian residents who are returning after staying abroad for at least 1 year or more, they can open these types of accounts. Currencies can be held in foreign currencies like US dollar, British dollar, euros. It allows the easy management of foreign earnings. It earns interest on the term deposits. Funds can be transferred abroad if required. Funds can be maintained in the foreign currency without converting to the INR. These RFC accounts are very beneficial for those individuals who want to retain the foreign currency, who manage the international finances, who avoid the unnecessary conversion cost after returning to the India. This is the basically meaning of RFC. Fine. Then moving further, that is APR. Let's discuss about the APR now. So, if we talk about this APR, that is what? This is an annual performance report which is submitted to the RBI. This annual performance report, which is basically to be submitted to the RBI through the designated authorized dealer bank within 31st every year on the performance of the overseas entity where the investments are made by the Indian party. So this is basically a type of an annual performance report that is needed to submit it to the RBI through the authorized dealer banks. Clear? So you can say there are some important terms here we have seen in this chapter, and LRS, if I say according to the examination point of view, one of the important chapters, that is LRS, Liberalized Remittance Scheme, and lots of concepts are here which are necessary to understand deeply. This is a deep chapter and some case studies are also there here. So I told you the most important concepts from the LRS, and I hope that these things are little bit clear to you. And if you feel any type of issue is there, you can ask in the comment section. So thank you so much for your time and for attending this session. I hope everything is fine. If you like this video, kindly give the like to the channel and also subscribe to the channel. And if there are any issue, you can ask and join the Telegram channel. Thank you so much. We will meet in our next chapter at the same time. Till then, take care everyone. Thank you.